Pre-qualification and pre-approval are two terms you may hear used interchangeably when shopping for a mortgage. They're similar, but there are also some differences. So it's not surprising you might be watching this video. Hi everybody, I'm Lindsay Cohen, a home buying expert here on the Zillow team. Welcome to Learn with Zillow, where we break down the complicated world of real estate. We'll equip you with the knowledge and the resources to feel confident and empowered throughout the home buying process. Today, we're exploring a topic that's critical for anybody looking to buy a home: the difference between getting pre-qualified and pre-approved for a mortgage. If you're feeling a bit confused, don't worry. We're going to clear some things up. What does pre-qualified mean? First off, let's talk about pre-qualification. This is usually a quick process where you tell a lender about your financial situation. Things like your income, your assets, and your debts. It might be a short, informal phone conversation or even a digital questionnaire. You generally don't need to provide a lot, if any, documentation, so it's a great starting point, especially for first-time homebuyers. Plus, it typically won't hurt your credit score since it often doesn't even involve a hard credit check. About a quarter of buyers who've not yet started working with an agent report getting pre-qualified. Now, pre-approval is the next, more serious step because it includes a real verification of your financial picture. What does pre-approved mean? So, pre-approval is a more detailed process. You'll need to submit documents to your lender, like your W-2s, your bank statements, and your pay stubs. The lender will do a credit check, which might show up on your credit report as either a soft or a hard inquiry, depending on the lender. This pre-approval step takes some more time, but it gives you a more solid understanding of what you can afford based on your verified information, and it'll likely streamline your future loan application if you choose to use the same lender for your mortgage. Once you're pre-approved, you'll get a pre-approval letter from the lender. This outlines the loan amount, the types of loan programs you may qualify for, like conventional, FHA, or VA, and an estimated interest rate, along with the annual percentage rate. In more competitive markets, a pre-approval letter is necessary to show home sellers you're serious about buying a house. It's a good idea to get pre-approved with a lender before you start shopping seriously and putting in some offers. When a seller sees an offer from a pre-approved buyer, they know there's a strong likelihood that buyer will actually get financing to purchase the home. But remember, just because you got pre-approved with a lender doesn't mean you need to use that same lender to finance the house. You're free to shop around for the mortgage that suits you best. The seriousness of the process is why 85% of sellers prefer to accept an offer from a buyer who's already pre-approved. Okay, let's see a quick rundown of the differences between the two. Pre-qualification can help you prepare to buy a home by giving you a clear picture of what a third-party lender thinks you can afford. Pre-approval gives you a verified, more concrete understanding of your budget. This will signal to sellers you're a serious buyer and generally allow you to start making offers. Okay, let's tackle some frequently asked questions. Why wait to get pre-approved? Buyers often start with pre-qualification to gauge their budget and then seek pre-approval when they're ready to actively shop and make offers. Pre-approval letters typically last 60 to 90 days, depending on the lender, after which you'll need a new one since your financial situation might have changed. Will you also need a hard credit pull to renew your pre-approval? It depends. Credit reports often last for 120 days, so you might not need a new one if you're re-upping your pre-approval. If you will need a new credit check, just be aware multiple hard credit pulls in a row can impact your credit. So try to only get pre-approved when you know you might be making offers on a home. That said, multiple hard credit checks within the same 45-day window are treated as a single inquiry, and those shouldn't impact your score if run within that window. Which is better, pre-approval or pre-qualification? A pre-approval letter typically carries more weight than a pre-qualification since it's a conditional commitment from a lender to approve your loan. If you're certain you're going to be looking to buy a home in the near future, getting pre-approved is likely the way to go. Do I need to be pre-qualified to look at houses? Well, no, but it's helpful. Many agents like to see a pre-qualification letter before spending time showing you homes. Do I need a pre-approval letter to make an offer? Technically, no, but in reality, having one makes it much more likely that sellers will seriously consider your offer, especially in a competitive market. Do I have to use all the money I'm pre-approved to borrow? No, you don't need to spend your full pre-approved loan amount. You'll want to carefully consider your budget and your lifestyle when choosing a home. The buyability tool from Zillow Home Loans can give you a clear picture of what you can comfortably afford based on your financial details and current interest rates. Check it out at the link in the description box below. And you can get pre-qualified with no impact to your credit score through Zillow Home Loans. That link is also below. We hope this video cleared up a few things for you, and be sure, of course, to like and subscribe to our channel to see more content just like this. And again, thank you so much for watching.